Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And note, Bookmap Discord is a very robust community of traders. There's information content on a wide variety of topics, asset classes, options, stocks, futures, crypto, also on a wide variety of languages. I'm also on X, formerly known as Twitter, and my name there is at Doug Pless. Here are the key tenets of my trading. This is the basis of my approach for trading. First of all, I believe options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the stocks and futures that I follow, equity futures and also large cap tech stocks. And for the S&P 500, SPX is the underlying index. That's the S&P 500. SPY is the ETF version of that, and ES is a derivative of SPX and SPY. So when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades, and they hedge themselves, hedge their delta exposure with ES futures. Same for the NASDAQ 100. NDX is the underlying index. QQQ is the ETF version of that index, and NQ is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side and they hedge their delta exposure with NQ futures. The focus of my presentation today is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset. And setups in that asset can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Trading Price and Time. Good afternoon, and Doug here, not Bruce. Bruce will be on tomorrow morning at 10 a.m. All right, here's my agenda for today, Thursday, February 22nd. First of all, I want to go over news items for the day. Then I'm going to go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. And yes, I will be looking at NVIDIA. All right, let's start with news items. So, of course, NVIDIA reported earnings after the market closed yesterday. I think the earnings announcement came out right around 4:20 p.m. So that is important to note that time. And right now, NVIDIA is trading up about 15% on the day. All right, let's take a look at, and we'll take a look at NVIDIA much more closely in a few minutes. And hello, NC40G, welcome, glad you're here. All right, so at 9:45 a.m. today, there was some PMI data that came out. Services PMI that came in lower than expected, lower than forecast. And manufacturing PMI came out greater than expected and greater than the previous number. All right, let's see the results of that. That was at 9:45. This is the ES futures and Bookmap. Very bullish reaction to that data. Just led to a continuation of the move higher that happened just a few minutes after the cash open. And of course, the bulk of the rally has really taken place overnight. Excuse me. All right, so that's the data, and I don't believe there's any economic data tomorrow. No events, no economic data, other than Fed speakers throughout the week. All right, so let's move on to positional analysis now. And this is, like I said, the ES futures and Bookmap. Before I take a closer look at this chart, I want to step back, look at a larger time frame. So I'm going to go to the underlying index, SPX. This is a one-day chart in Thinkorswim for SPX. I need to change this line again. I had set it earlier to the high of the day. Now it looks like it's higher. So this is showing the rally that began last year, October 30th. And when I checked earlier today, that rally was good for about 960 points, and it looks like it will be higher at some point today. So more than 960 points from low to high. All right, so that's a one-day chart. Now let's move on to a 1-minute chart, a 1-hour chart, excuse me, to get a closer look at what is going on now. I can just change this line. Right around that high. All right, so around 4108 to 5080. All right, this is the, again, SPX 1-hour chart. This is the January expiration, and this is showing that SPX broke out above that 4800 level. That was the call wall toward the beginning of the year. SPX broke above that level and now is trading almost to 5100. So the call wall during this year has progressed up from 4,800 now at 5,100. I'll talk more about the call wall in just a few minutes. Note this is the February expiration. Unlike January, there was a little bit of consolidation after the February expiration. Both were call dominated. A little bit more expected behavior after the February expiration. That lasted for a couple of days. Then, of course, NVIDIA reported earnings after the close yesterday, much better than expected, and SPX is trading well above previous highs. All right, let's take a look at some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. I update this once a week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market. I update those once a day. Note, I'll talk about this just a moment. These levels are based on the options market, the expected move. For SPX, I'm calculating this expected move from the closing number yesterday. So SPX closes at 4:15 p.m. Eastern Time. Note that NVIDIA reported earnings. The announcement came out at 4:20 p.m. So after SPX had already closed. So this SPX, this expected move, daily expected move for SPX does not account for the change in price after NVIDIA reported earnings. Note that Spotgamma does provide a different number that is provided to Spotgamma subscribers, and that's based on the opening number for SPX. So based on that number, 62 basis points, the expected daily move high of the day according to the Spotgamma number, was about 50.70. So SPX is trading above that level as well. Let's just take a look while I'm talking about that. Let's take a look real quick. So this is the basic calculation. I get this number from the options chain at Thinkorswim. I'm not sure if they use this calculation or not, but this is the standard calculation. The price of the underlying asset times the implied volatility times the square root of the number of days divided by 365 or 252. I've seen it both ways. They're showing 252 here, but it could be 252 being the 365 calendar days and 252 trading days. So that's the basic equation, and here they're saying that indicates there is a one standard deviation, 68% probability that the stock price will stay within that range. So one standard deviation expectation, price will stay within that range. So sometimes it trades outside of that range, like today. All right, so those are the expected moves. SPX trading well above the upper daily expected move. It gapped up above that level, and also now trading above the upper weekly expected move. All right, let's take a look at the other levels on this chart. I'm going to zoom in just a little bit. All right, the other lines on this chart are showing Spotgamma levels. And there's one primary level that's at 5,000. That's right here. And that's a big combo level. First of all, that's the volatility trigger. Spotgamma's proprietary gamma and volatility flip level. Below that level, market maker's position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. On the other hand, above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. So at the beginning of the day, gamma notional for SPX was negative, and now SPX is trading well above the volatility trigger, and most likely the gamma notional that we'll take a look at in just a minute will shift to positive tomorrow. That's also the put wall. That's a strike with large net negative gamma that can be expected to act as support. And then finally, that is also the absolute gamma strike. That's a strike with large absolute positive and negative gamma. That's where most of the gamma weighted open interest is concentrated. And then the call wall is up at 5,100. That's a strike with large net positive gamma, and that can be expected to act as resistance. So according to this, that's the potential ceiling for price, and according to this, SPX still has room to run higher up to the 5100 call wall, although S&P 500 is trading well above the SPY call wall at 500. I would not be surprised at all if that strike moves up tomorrow. And finally, let's take a look at a 1-minute chart, sticking with SPX just to see the levels in play for today. And I'm going to talk more about this low of the day for SPX yesterday in just a minute. So there was a sharp rally toward the end of the day yesterday, and the rally has pretty much continued overnight, and now SPX is grinding higher. Again above the upper daily and weekly expected move. Note this earlier today, this 50-52 combo level was in play, acting as resistance at the open, then support, and now again SPX is grinding higher. All right, let's take a look at Bookmap now. Let me check for questions. Hello, Stephen. Welcome. Glad you're here. And Pharaoh asked, one standard deviation is the difference between lower and upper expected move. Yes, so according to the information that we looked at, the expectation that is one standard deviation 68% of the time, so greater than 50% of the time, that whatever underlying asset you're looking at is expected to stay within that range. So it's based on price, implied volatility, and the number of days or the time period in the calculation. So that does, again, that does not mean 100%. All right, so this is the S&P 500, ES futures and Bookmap. I have my own cloud notes here, so I can show SPX levels. There's that 50-52 level that I spoke about earlier, very early in the day, acting as resistance, then support. Now the next Spotgamma level in play is the 50-76. That was noted as resistance in the Spotgamma AM Founders Note. It did briefly act as resistance. I also have SPY levels on this chart. And note that SPY 503 was a great entry point for a long just after the cash open this morning. And for SPY, all of the gamma levels are down below, so there are no spot gamma levels for SPY, just round numbers here. Those are shown with the yellow numbers, 3-digit yellow round numbers. Then the spot gamma levels are shown with white labels, white lines. So there's the 5100 call wall. That's the next target above. All right, note there is a difference in price between ES and SPX. And today that offset jumped down pretty considerably. Yesterday I was using 14, today it's 12. So I'm showing SPX 50-50, for example, at ES 50-62. And that those index relationships that I'm using do change a little bit every day. And I post the preliminary and the final numbers that I'm using in Bookmap Discord every morning. I post the preliminary numbers before the cash open, and then I try to get the final numbers out by 10 a.m. Eastern. All right, so big jump up in the morning and some consolidation, and then the right around noon this steady uptrend began. We'll talk more about setups in a few minutes. All right, let's move on to NASDAQ. So this is the NQ futures and Bookmap, and just like the S&P 500 ES futures, I have my own cloud notes, so I can show levels for the underlying index products. So let's take a look at those charts first. Here's QQQ. This is a 1 minute chart, so I'm just showing today's data. Steady uptrend beginning right around 11 a.m. Again, Spotgamma levels down well below, except for the call wall, which is up at 440. So according to that, the NASDAQ has room to run higher up to the potential ceiling at the 440 call wall, and that level has remained at 440 for some time. And I did forget to mention shifts in levels for SPX. Not really much of a factor today, since these levels were based on information that came out before NVIDIA reported earnings. But for SPX, the volatility trigger and put wall both shifted higher up to 5,000. And there were no shifts in levels for SPY. I expect pretty significant shifts in levels for tomorrow for SPY. And for NDX, which we'll take a look at in just a moment, the volatility trigger and put wall moved higher. And for QQQ, the volatility trigger and absolute gamma strike moved lower. And again, I expect pretty significant shifts higher in gamma levels for all these instruments. All right, so just round numbers in play for the QQQ today. 436. Acting as resistance, then support. All right, let's move on to NDX, then we'll get back to Bookmap. So NDX, you can see this is the price for today, all the gamma levels shown with these red lines well below. 17,750 is the call wall and the absolute gamma strike. All right, let's get back to Bookmap. So NQ trading above its upper daily expected move, upper weekly expected move. So just like ES, I have my own cloud notes. So again, note just yellow levels for QQQ. All the Spotgamma levels are well below. All right, let's take a look at gamma notional, and then we'll take a quick look at gamma notional, and then the Vanna model, and then move on to some setups. All right, so first of all, this is how market makers were positioned on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers, with the exception of NDX, are negative. So this indicates at the beginning of the day, market makers' position on the gamma curve was negative. In a negative gamma environment, this indicates that traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. Those numbers did all shift more negative from yesterday. And let's take a look at the Vanna model to get a better indication of what that means. I'm going to take a look at this SPX Vanna model. So what this chart is showing is delta notional. This is market makers delta notional. On the vertical axis, spot price for SPX. On the horizontal axis, there are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional may change with changes in price and price only. The purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Van effect. Van is a second order Greek, and that was definitely a factor in the rally yesterday. All right, so this is the Vanna model for today. Let's check price. SPX currently trading right around 50.82. So I'm looking at the purple curve now, and this is about where SPX is located. That's 50.83, where I'm holding my mouse. So what this is showing is if price continues to increase, market makers' delta notional will increase. So price increasing, market makers' delta notional increases according to the purple curve, and they will have to sell futures to hedge their delta exposure. That's typical of a positive gamma environment. Let's take a look at yesterday. I can step back a day on this. Very similar curve, but the price for SPX was completely different. And we'll see in just a minute that at the low of the day, that was after the FOMC minutes were released, at the low of the day, SPX traded to the tick to 49.46. That was the zero gamma level yesterday. We'll take a look at that again in just a minute. So SPX traded down to 49.46 and then rallied pretty sharply. We'll look at the cause of that rally. We know that put Vanna was the fuel for the rally. So what this is showing is from that level, if price increases, implied volatility drops, market makers' delta notional will decrease, and they can buy back their short hedges. That's called a put Vanna rally, and it's not a cause, but it can add fuel to a rally in a negative gamma environment. So keep that in mind. We'll let's take a look at that right now. So the first thing that I want to go to, and this is from yesterday. This is a screenshot of the hero signal. We'll talk more about this in just a minute. The hero signal showing options trades and market maker hedging activity. The blue line is for puts. A rising line, whether it's orange or blue, indicates traders are taking positive delta positions. So a rising blue line indicates traders are selling puts, and a rising orange line indicates traders are buying calls. And this is for a combined signal for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. So just around 240, traders started selling puts in the Mag 7 stocks. Remember, these stocks make up a very large component of the NASDAQ 100 as well as the SP 500. And then about 30 minutes later, they started buying calls. That was around 310. All right, let's take a look at a chart for SPX now. And I'm going to leave that up for just a moment. So this is SPX, a screenshot from yesterday. So note here, let's see, these two levels. This was the zero gamma level yesterday, 49.46. Note the low of the day, 49.46, and also the lower daily expected move for SPX. This is from yesterday. This marked the low of the day, And as traders started taking positive delta positions in the Mag 7 stocks, SPX rocketed higher with, again, the low point of these two levels. So if you have any doubts about the impact of the options market and these levels that I'm talking about, this should provide some clarity how important these levels are. Then finally, let's take a look at Bookmap from yesterday. So again, this is a screenshot from yesterday. This is the lower daily expected move for ES. So normally these levels do work. Today in this unusual situation with NVIDIA earnings, they are not working. But again, remember, lower number daily expected move, weekly expected move, 68% of the time. And also it's the label for the 0 gamma level is obscured, but that is that's at the same level. The ES to SPX offset yesterday was 14, so that 0 gamma level was shown at 49.60, also the low of the day. All right, so that's from yesterday. With that, the spark being the again, the shift in hedging flow for the Mag 7 stocks, and the fuel being the put Vanna. All right, so that's from yesterday. Now let's take a look at today. First of all, I'm going to zoom in. This is ES. I'm going to start with the S&P 500. All right, before I take a closer look at this, let's take a look at the hero signal for today, see what options traders are doing.
Iceberg ESH for CME by 302.
Oops, I lost. I must have closed out my give me just a moment to get back. And all right, sorry about that. This is the hero signal. So the information that we've looked at so far, other than Bookmap, is based on static data, updated once a day. Overnight, Spotgamma takes open interest data, applies their proprietary algorithms to come up with the levels. Again, I'm expecting a pretty significant shift higher in the key daily levels for the S&P 500 and NASDAQ. All right, so what this chart is showing, now we're going to move on to execution to real-time data. So this is the hero signal again. Hedging impact real-time options. This is available to Spotgamma subscribers. What this chart is showing is price for SPX. I'm going to start with the S&P 500. Price for SPX, shown with a white line, and the hero signal is showing options trades and market maker hedging activity for a combined signal for the SPX, SPY, XSP, and ES futures. So showing options trades, market maker hedging activity for all those instruments, again in the one combined signal. And a rising hero line indicates traders are taking positive delta positions. They are buying calls and or selling puts. Market makers take the opposite side, and they have to buy futures to hedge their delta exposure. All right, let's zoom in on this chart. Note it's pretty choppy. And one thing I'm going to do, I'm going to separate out puts and calls. And I'm going to, there's an auto zoom, error. So jumping back and forth seems to fix that. So what this chart is showing is calls and puts. The rising orange line indicates traders are buying calls, and all those instruments, market makers are selling the calls. They have to buy ES futures to hedge their delta exposure. The falling blue line indicates traders are taking negative delta positions in call and puts. They are buying puts. So they're buying calls and buying puts. Pretty typical for an index. Call buyers much more aggressive and definitely driving price to higher today. So the key today was to watch the orange signal. So one thing, I'm not sure what was going on this morning, and we'll see that when we take a look at some other hero signals. For the first 15 minutes, the data was, there was a problem with the hero data. So about the first 15 minutes, problem with the hero data, and then right just before 9:50, 9:45 to 9:50, it looks like the data was recovered and the hero signal moves higher. All right, so until then, I was really relying on watching order flow on Bookmap. So let's go back to Bookmap now. And right after the cash open, there was a little bit of a move down at this 50-52 and 50-50 level. 50-50 was noted as resistance in the Spotgamma AM Founders Note, and that is also SPY 504. That didn't last long. So let's take a closer look at order flow here. First of all, the volume dots are showing market buy minus sell. Green volume dots indicate more buyers than sellers. And note the abundance of aggressive buyers here, green volume dots. The dark blue line here, rising dark blue line, that's cumulative volume delta. Rising, that's bullish. So a good entry point, somebody asked about this in Discord this morning, I mentioned this, was the really the setup of the day. Using this SPY 503, price often reacts at SPY round number levels, and that's where aggressive buyers were coming in. Oops. Again, you can just see the large volume dots on the way down and the way up. Here's the 9:45 data, PMI data, very bullish reaction. Note the rising yellow line. That's showing the buy stop orders were helping to fuel that move higher. That's also shown by the on-chart indicators. Buy stop orders fueling the move higher almost to the upper weekly expected move. And this is where the hero data came in right around 9:45, 9:50, indicating traders were buying calls. There was a little bit of a pullback here to this 50-52 level. Remember before I said it acted as resistance, then support. Then pretty long period of consolidation. Remember, all this time traders are buying calls. Looking for long entries, consolidation there, another consolidation. This time a little bit easier read because of all the liquidity shown by the heat map. The heat map in Bookmap shows a history of the limit orders in the order book. Below that price, those are limit buy orders. It looks like traders were front running that. Finally, ES broke out of this consolidation. And there were a couple of tests of 505. This is just SPY 505 round number level. Good entry points for long. And that second test is where that steady mechanical uptrend began. Pullbacks to trend line for long entries. All right, let's go back to Hero. So that's the S&P 500. Traders buying calls, market makers sell the calls. They have to buy ES futures to hedge their delta exposure. And let's take a look at another signal, the MAG 7 signal that I showed before. Let's step out and see what this is. So as I said before, this is a combined signal, very valuable hero signal, showing options trades, market maker hedging activity for Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. I'll zoom back in. Traders have been buying calls all day. Here's that little glitch with the data this morning, up until about 9:45. So my guess is that if this data, full data was from the cash open was available, it would show that traders were buying calls from the 9:30 cash open. So they've been buying calls in all these stocks. So for a stock, when traders buy calls, market makers sell the calls, they have to buy stock to hedge their delta exposure. All right, so that's a factor that I look at for both the S&P 500 and especially the NASDAQ. All right, so speaking of NASDAQ, let's take a look. Let's go back to Bookmap, go to NASDAQ. Very, very steady uptrend all day. Now, if you're waiting on the hero signal, let's go back. Waiting on the hero signal, looking for pullbacks. This was probably the first pullback. No price here is shown in terms of QQQ. So let's go back to, so waiting for a hero signal starts about 9:45, pullback 9:55, and price moves higher. Also a pullback at around 10:50, 10:55. Let's zoom in on this. $9.55, $10.05, pullbacks to around NQ 900. Next pullback to that level, right around 1050. As traders continue to buy calls in the MAG 7 stocks. All right, let's take a look at some stocks. First of all, of course, the star of the day, NVIDIA. And NVIDIA, I have 24 hours of data here. That's what I loaded this morning. So this is NVIDIA yesterday. And note that I gave up on showing the levels between the zeros and the fives. It's just too much. So low of the day yesterday after NVIDIA reported earnings was right around 645. So this is the cash session yesterday. Low of the day after reporting earnings, around 645. And currently NVIDIA trading somewhere between 775 and 780. So let's go take a look at trading today. So at the cash open, the opening print right around 750. Currently NVIDIA trading somewhere between 775 and 780. Let's see what options traders are doing. Let's go back to Hero. Go to NVIDIA. So we're looking at the Mag 7 signal now. Take a look at NVIDIA. Usually pretty close. So again, a little bit of glitch with the Hero signal in the morning, but data comes in 9:45. Flow alert indicating significant options activity. Traders aggressively buying calls. And note, this is a very typical pattern. They took the foot off the gas sometime late morning. Note the change in the Hero signal, and price consolidates, levels off. As call buyers, again, take their foot off the gas, they stop buying calls. Now it looks like around 120, 130, they started buying calls again. Let's go take a look at NVIDIA. So now maybe trying to move up again. Note the liquidity here in the heat map showing liquidity in the order book. Resting limit orders at 770. Those are limit buy orders. All right, let's take a look at AMD. Moving higher in sympathy with NVIDIA. 180 is the call wall. Let's go take a look at Hero, see what options traders are doing. Go to AMD. Traders buying calls shown by the rising orange line. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. There's the 180 call wall. Note there was some consolidation around that level. We'll see that in Bookmap in just a moment. Price continued higher as traders resumed buying calls. Then the pretty similar pattern to NVIDIA, very typical pattern. Sometime mid to late morning, call buyers take the foot off the gas and price consolidates. Let me mention for this call wall breach, what happens. That call wall, that's where most of the calls are concentrated. And for a stock, Spotgamma assumes that traders are long calls, market makers are short calls, just the opposite of the index. And those calls at 180, as price moves above that level, they go further in the money, their delta increases, and market makers have to continue to buy stock to hedge their delta exposure as those short calls are increasing in delta. Let's go back to Bookmap. Here's that consolidation at the 180 call wall level. A little bit of resistance, and then support, and now price consolidating. Made it up to around 183, now consolidating. And finally, I want to take a look at Meta. And it seems like Meta moves up on just about any excuse. All right, let's go take a look at Hero. Go to Meta. Again, a little glitch in the morning. As soon as Hero turns on, flow alert indicating significant options activity. Now, in the case of Meta, options traders have really not taken their foot off the gas. They continue to buy calls. That looks like the slope of the line is is not as steep as earlier today, but traders continue to buy calls in Meta, and Meta stock continues to move higher as traders buy calls, market makers sell the calls, they buy stock to hedge their delta exposure. All right, does anyone have any stocks they want me to take a look at? Let me know and I'll be glad to do that. All right, Slow to Razi wants to look at SMCI. And I'm sure it's moving higher in sympathy with NVIDIA. So for SMCI, traders are buying calls and selling puts. SMCI well above the 800 call wall. Remember, market makers are short calls at that level. As price moves up, they go deeper in the money, delta increases, and they have to continue to buy stock to hedge their delta exposure. And they're also selling puts. Shown by the positive notion of value, the rising blue line, call buyers more aggressive, really driving price today. Not quite as clear as NVIDIA and Meta. So SMCI up over well over 100 points today. Let's go back to the S&P 500. Randy wants to take a look at Intel. Yeah, we can do that. I don't know how active options traders are in Intel. Not very. So there you go, Randy. Not much going on in Intel. Traders are buying calls, buying puts. Note the notional value here, pretty small. 9.14 million calls. And that's really just after this large order here, shown right around 205. Let's compare that with NVIDIA. 1.72 billion. So a huge difference in delta notional value between NVIDIA and an Intel. Let's go back to the S&P 500. Traders continue to buy calls. Let's go back to Bookmap. Grind higher continues. And the 5100 call wall on deck. And tomorrow should be interesting to see how these levels shift. Again, I'm expecting pretty significant shifts in the gamma levels. Let's just take a look at Let's take a look at SPY absolute gamma. Right now, SPY is trading right around 508. Let's go to SPY. Absolute gamma, zoom in on this. Here's 508. So all of this chart is showing absolute gamma. Orange bar is showing positive gamma or call gamma. Blue bar is showing negative gamma or put gamma. This is market makers gamma position, absolute gamma. So I'm expecting a pretty significant shift higher as these gamma levels move up. Certainly I expect the SPY call wall to move higher. But again, according to this, according to the SPX call wall up at 5100, SPX has a little bit of room to run higher up to that level that is expected to act as resistance. Let's take a look at NASDAQ. NASDAQ continues to grind higher. And here's the QQQ 440 call wall. Again, it's been at that level for some time. So just a QQQ point away from that level, about 40 NQ points, 41 NQ points. Note for NQ, cumulative volume delta has been rising all day. That's shown by the dark blue line. Also, buy stop orders fueling the move higher. That's shown by the yellow line. Large traders are fading this with iceberg orders. That's shown by the falling light blue line. Also the negative number there. Large traders use iceberg orders to hide their size. Let's check on ES. Similar situation. CVD not as quite as clear. But large traders are starting right around 11 a.m. have been selling this move with iceberg orders shown by the falling light blue line. 5100 call wall on deck. Right, last call for stocks. All right, WRB asks, would you post the expected moves formula chart? Today shows the power of Spotgamma, Hero, Bookmap when in concert. These textbook moves really drives the metrics across the board. Almost impossible to make a misinformed move. Thank you. You're very welcome. WRB, thank you for your summary here. I will definitely post the expected moves formula. And I just note I get my expected move from the options chain at Thinkorswim instead of doing a hand calculation. Let me just show that real quick. So this is SPX up over 109 points today, ES, 110 points for SPX. So this is how I get the expected move. And I'll just talk about the daily expected move. So today's February 22nd. This is tomorrow, February 23rd. And I look at this number right here at the close today. So SPX closes at 4:15 p.m. Eastern Time. I take that number and add it and subtract it to the closing price of SPX to get the expected move for tomorrow. Now again, what I mentioned for what Spotgamma is doing, they have a different calculation, their own proprietary calculation that they're using gamma levels, and that is based on the opening price. And SPX is trading above the upper daily expected move based on my approach as well as the Spotgamma approach today. Right, so when I have these numbers, WRB, I will post them in Discord, and I'll post the formula as well. All right, everyone, my time is up. I want to thank you very much for watching. Thank you for your questions and comments, and I will see you tomorrow. Thanks again. Bye.